Bitcoin fell 5% overnight, taking many cryptocurrencies along for the ride. The US markets also closed out the week much weaker than they began the week, and many are blaming this on the inflation data out from the US. So is it really as bad as what the media is making out? Let's take a look at some of the macro data on BTC and how this affects the markets at key cycle bottoms and tops. Not only are we going to look at this on Bitcoin, we're going to look at it on Ethereum and the US stock markets. This is going to be an indicator that you can use broadly across all markets that you can chart. Volume data is a key indicator for technical analysts, and in some charts they do not give you this data because of how important and how powerful the data can be. Let's take a look at that after. You know what to do. That like and subscribe down below, and of course top of the video description is our free crypto and economic report coming out this week. All right, guys, let's take a look at the macro volume analysis and how this has called tops and bottoms on Bitcoin, on ETH, on the stock market, and how powerful it actually is. Volume is something that I use a lot in my trading. It identifies where the smart money is coming in to support the market price and where it's coming in to dump the tops. And so looking at this on a more macro time frame, on a say monthly or a weekly chart, really helps clear out the noise of the market and allows us to see what that smart money is doing. Now, it doesn't always call that exact top, but it works a lot more efficiently at bottoms. It is very much helpful at calling a lot of significant bottoms when we look at the volume data in relation to the previous volume data. Potentially just the last few bars, the more the better, but ideally we want to see an increased volume data at the market cycle turns. This can be used on all time frames, so just be sure you understand which time frame you are trying to analyze and why you're doing it. Maybe it's part of your own short-term trading plan. The longer the time frame, the bigger the turn is going to be. So recently we saw extreme volume, and I say extreme because it has been some of the highest volume that the market has had for many years, basically 2 years, almost 2 years, going all the way back to where the market broke out and had an exhaustive move back in January of 2021. That volume data that I'm looking at here is November of 2022, the FTX collapse, the old crypto black swan event that a lot of people are referring to here. So I want to pay particular attention to this day because of that volume that we see coming into the market. That volume was higher than anything in the last 21 or 22 bars in this case, basically 2 months short of 2 years. The previous high volume for around this region was the top, or at least the exhaustive move into January of 2021. And of course, we know from history, there was 3 months higher than that, but really the move began to wear out in January. We had a nice solid February, and then you can see from March and April, it was basically around the top before the market dumped in May, with extremely high volume coming all the way back to that January data. So the January month was from 27,600 to a peak at 42,000. And we know May came back to around $29,000 to $30,000. And so what we'll look at moving forward is, even though the massive volume came in example here in May, June went lower, but it was not that much lower if we look at it in terms of a percent move. So from that low to the next low was 4%. So you can see where the smart money was coming in to support the market around those prices. You can see closes, you can see where these low prices of the bars occurred, and it wasn't that much lower before you get that pivot move. So going back into history, just to have a look at some other examples of this, we have the pandemic low, extreme volume, which was the most extreme going all the way back to the peak in 2017. So in this case, it was 27 bars, 27 months. That is 3 months over 2 years. So 2 months and 3 years before the market had this extreme volume again. Now, the difficulty with the volume, especially in crypto, is that we have different exchanges. Some exchanges are in favor, then they fall out of favor. And so to collate the data, we really have to look at something like the index. But even then, sometimes the index isn't the best indicator for this volume data. So although it's there, you need to pay attention to which exchanges are popular at the point in time that you're looking at in terms of the cycle. And so looking at Coinbase, it wasn't really the major exchanges that a lot of people were using throughout this period of 2015, 16, 17. It did fall into favor throughout that cycle, but it has become obviously far more used in this particular cycle than it was in the last cycle. So that's the sort of data we need to pay attention to as we continue to go through the volume data throughout the cryptocurrency exchanges. So something like Binance wasn't used as much in the later part of 2017, but of course now there is a ton of volume on Binance because it's a more favored exchange around the world compared to what was popular in 2017 when I started, which was something like Bittrex, which no one even knows about anymore. So with the nuances in mind around how to read this volume indicator signal for those tops and bottoms, we'll progress using the Coinbase exchange. So going back to December 2017, it was extreme volume. So even though it may not have been the exchange of choice for everyone, you can still see the volume was quite high relative to that same period. So that's a really important point to note, because we could go into something like a Bitstamp, which was quite popular 2015 through 2017, but then Bitstamp isn't used anywhere near as much as what it was back in the day. This was the exchange for the previous bull market, the 2013 bull market into that bear market. So really pay attention to that. So again, to Coinbase, extreme price tops and extreme volume. This led us into that low of November, December of 2018, extreme volume to the downside, much higher than anything that was seen all the way back to 8 months. And we had that through November and December. Now, really interesting point to note here is that even though the volume was high in December, it dropped a little lower. You can see that the smart money was using this as what's called stopping volume in Wyckoff analysis. And so the market is being supported at these prices. Plenty of buyers coming in to take the supply off the market, which is signaled here with that price not going much lower. In some cases, not lower at all, like in January, but in December, it didn't go that much lower compared to the low of November, 9.5%. So I bring this up because the same sort of thing happened in May and June of 2021. The price did go lower, but only by 4%. And so the extreme volume came in the dump, in the panic, when a lot of the dumb money is selling and the smart money is buying up. The same sort of thing happened the following month in June, really trying to get out of their positions. The price is being supported. July, you had the price supported again, and the market starts to move away. And you can see that the volume drops off compared to those low prices. It's not that the volume is really low. It's just relatively low compared to the months where a lot of supply is changing hands. Now that the supply has changed hands in these types of periods, the market's ready to move again. And so we can take a look back at the pandemic low, 2020, March 2020, extreme volume. The market turned around off that low and started to move again. We have the peak in June of 2019. You can see the volume really starting to ramp up into that peak, just like what happened in 2021 into that peak. The following month after June, we had even higher volume, but you can see what happens in these cases is people are trying to buy the dip in the last stage of the market pushing up. That's in this particular cycle. So they've seen a pullback and they're all trying to jump in to buy the top. Not only that, there were some big weeks during this period as well. During July, there was a lot of volume, whereas in June, there wasn't as much volume, but it had the highest weekly volume, which we'll drop down to on a lower time frame in just a moment. So essentially, we had the market trying to buy the dip, and it didn't go anywhere after that point. So we started to fade out and then eventually got that last COVID black swan event into that dump to clear out the rest of the weekends before the market was able to recover and push higher. And so that basically covers the last 6 years of volume data using the Coinbase chart here. In each of those cases, relative to the period that we're using the data from, for example, the bottom to the top here in 2017, 2018, you can see that the bottoms happened on extreme volume compared to the previous sessions, so the previous several months. We're not looking at hours or days or weeks in this case. This is months, so a lot of buying happens at these times. So this was the biggest volume at that time supporting the price. Relative to that was the top, which basically is a lot of, unfortunately, dumb money coming into the market. The smart money is offloading that supply as fast as they can. They don't need to sell the top. They just need to offload their supply because, like we can see from the volume, they come back in and buy those drops again. All they're trying to do is just take a chunk of profits out of the middle. Maybe they're buying in these levels at the 4K. Maybe they're selling at around 10K, even though the top was 14K. Either way, they're just trying to take a chunk of profits out of the middle, come back in, buy as close as they can to the low, ride it up. Like you can see here, they were selling into January, which essentially was a peak of $42,000, not overly concerned with having to sell the exact top, unlike the retail investor who is trying to buy the top and then sell even higher. You can see that happened here where there just was no volume into that next run into the peak. So relative to the next cycle here, we can look at the top area. Relative to the bottom, it was the biggest volume, which was a signal saying that maybe this run is going to come to an end. Doesn't, like I said, it doesn't have to be the exact end, but the bottoms typically show extreme volume. So we can see that through here with May, and then June started to drop off because a lot of the supply had already changed hands. Supply meaning a lot of the Bitcoin had already changed hands. And then the market started to rally again because the buying had had its day. All the buying had happened. You could see that from the price not able to push any lower, and then the move moves to the upside. So going to today, after we've covered that last 5-6 years, FTX collapse, November 2022. This is the biggest volume on Coinbase that we've seen since that prior move. That's 2 years prior. That's the biggest volume that has come in. What else looks the same to these previous moves? In this case, December was also significant volume, especially during December, which is typically a low month. December is typically a low month because most people go on holidays for those last week or 2 weeks of the month, and there's just less trading going on, but relatively high volume. And then we had January even higher with the breakout from this move here. So just looking at December to November, you can see that the market didn't push any lower. Even if it did push lower, wouldn't be the end of the world because we've seen that multiple times before. November, December, we've seen lows here. Just looking at price in this case, push just that little bit lower before we get the move out to the upside. The biggest thing to note here is just how significant that volume was, and we ended up closing a fair way above the low of the bar as well, which shows that there was enough support to push this away from the low of the bar. Now, the data from the charts, the objective data here, shows a pretty significant case whereby if we have extreme volume at the end of a cycle move, that can basically say that the low is in or the top or very near the top in this case. Now, in some cases, this may not be exactly true, like we could see in May and June here of 2022. This was pretty significant volume. If you take away all of this, because obviously this data wouldn't have happened in May and June, this was very significant volume compared to the previous lows and tops in the market, which is probably why the market trended sideways and was testing to see whether there was any more supply coming into the market. Now, this bar here, which a lot of people are calling a black swan event, and now we're starting to lose some momentum, we can see that black swan events at the end of a move are extremely useful to clear out the last of the weak hands. Even if the bottom may have been a little higher, they've really done a great job to clear out any other weak hands in the market before they start to move in the opposite direction. So this may have been the bottom if FTX didn't collapse, but that FTX collapse just was able to make this signal even clearer by increasing the amount of supply that came into the market and showing the support coming into the market, especially about 1 to 2 months later, where the price is now above all of this area of November and December, and the price is back within the previous dump bar. So this dump here had very significant volume in June, and the price is now trading within this bar. So if we look at the probabilities moving forward from here, if Bitcoin is to break this low of 15,400, we really need to see even stronger volume come through just based on what we've seen in the past. We probably want to see volume at least at these levels over the next few months for it to break down from that point. Now, I'm not saying that it has to break down, but that's essentially what we would want to see from Bitcoin to be able to break these levels, considering the supply has been bought up and now pumped back up to 25K. It's not impossible, and I'm sure there's an argument out there from the bears to say that this is what the manipulators are doing and the whales are doing. But going down the rabbit hole of manipulation and whales is basically a fool's game and really there to sucker in the retail into other narratives around the market. All markets are manipulated. There are whales in all markets. We just have to get on with the game and try to find out what they are doing based on the volume. Speaking of that, we can also move across and have a look at Ethereum. Does this happen in other markets? And of course, I'm going to show you examples of how it happens, but I want you to have a look at it yourself to see whether you can find these examples in any market that you're following yourself. And it happens a lot clearer in altcoins as well, as those are extremely manipulated. So just looking at ETH, you can see the top here, just using the Bitstamp chart, which is a bit more popular back then. We've got a peak at the highest volume. Sure, we don't have any volume data back here, but we have that peak on high volume. We have the low coming in on extreme volume. We have the top just a month earlier on extreme volume here. We go back to the COVID dump, extreme volume. We can move forward to the market breakout on extreme volume, the market peak and bottom on relatively high volume, and then the volume dies off on Bitstamp. So we've got to move across to something else that people are trading. Coinbase. So Coinbase here, very high volume, top and the bottom, very low volume through this period, considering what's already happened, which is a pretty good sign of distribution. And then the market dumps into more of a bottom pattern that's forming here, especially looking at November, which was a higher low to June, but it was on more extreme volume. So we're going to keep watching this to see if we get another move for ETH, because there has been some quite extreme volume moves, but we haven't seen that just yet. So something just to keep an eye on. I'm not saying it has to dump to lower prices, but I'm a little bit more concerned with ETH than I am with Bitcoin, considering where it's currently at. Volume data is extremely powerful when used in conjunction with other indicators, in particular the Gann swing indicator, but also bar or candle reading, looking at the closing prices and patterns that are forming in the market. We have specific courses on this with our TIA Premium membership, going through Wyckoff analysis, volume analysis, and Gann swing trading for short-term and long-term trading plans. So if you want to learn more about that, check out the link in the video description for TIA Premium. While you're there, like and subscribe, get those fireworks going off. Going back to the chart here for Bitcoin, as I said earlier, we're just going to look at the weekly bars themselves. So if you can just look through these lines here, which I had on for the monthly, check out the weekly bar when FTX collapsed. That was right here in the first or second week of November of 2022. This on Coinbase was the highest volume that we had ever seen on Coinbase for the Bitcoin chart. The absolute highest volume ever in history. The only times it came close were the low for the pandemic crash, so that just that 1 week before the market bounced out of that low. The May low, where everything crashed with the news about China banning mining. And then, of course, we had a few weeks or several weeks before the market started to move again. And really, you had the area around the peak in 2017. So on each of these occasions, the market had a very significant turning point. You can see here there were two bottoms. We also had a top. So typically when the market gets to this extreme level of volume, whether it's buying or selling, in this case it was most likely a lot of buying because the market started to move up from that point, this has marked significant turns in the market. Now for my opinion, this is one of the many reasons why I'm quite bullish on the macro view of the market, even though the market fell 5% over the last 12 hours. With volume this huge and a market not able to dump any further after that point, it typically, not always, but it typically signals that the supply has been all dried up. The supply has been taken by all of the buyers. Typically, it's the smart money, and they continue to drive the price up from that point to test where will that next level of supply come back into the market? Volume analysis is an absolutely powerful tool. I'm going to continue to follow it up on the channel, so make sure you do subscribe, like the content up, go out, have a fantastic weekend, go see that sun wherever you are, and I'll see you back here real soon. Until then, peace out.